My friends, I need you to stop what you're doing right now and listen to me very carefully, because what I'm about to share with you could mean the difference between getting your full Social Security benefits or losing out on thousands of dollars that rightfully belong to you. I know you've worked hard your entire life, paid into the system for decades, and you're counting on every single dollar of your Social Security check to cover your bills, put food on the table, and maybe have a little something left over to enjoy your retirement years. But here's what the Social Security Administration isn't telling you in big, bold letters, and what I've discovered after speaking with benefits counselors and diving deep into the latest regulations. There are specific deadlines coming up at the end of December, and if you miss them, you could lose hundreds or even thousands of dollars in benefits that you've already earned. I'm talking about real money here, folks. For some of you, this could mean losing out on an extra $2,400 or more, and that's not pocket change when you're living on a fixed income. Now, I don't want you to panic, but I do want you to pay close attention because time is running out and the clock is ticking louder with each passing day. This isn't about politics or fear-mongering. This is about making sure you get every penny you deserve, and I'm here to walk you through exactly what you need to do before the calendar flips to January. Let me tell you about my neighbor, Dorothy. She's 73 years old, worked as a school teacher for 38 years, and she's been receiving Social Security retirement benefits since she turned 66. Dorothy thought everything was fine with her benefits until she got a letter from Social Security in early January telling her that she had missed a critical deadline in December, and now she was going to see a reduction in her monthly check going forward. She called me in tears, asking how this could happen when nobody told her about any deadline. And that's exactly the problem, my friends. The Social Security Administration sends out notices, but sometimes they're buried in complicated language, or they get lost in the mail, or people just don't understand what they're reading. Dorothy ended up losing out on $200 a month, which adds up to $2,400 a year, all because she didn't know about a simple form she needed to file before December 31st, and I don't want that to happen to you. So, what are these critical December deadlines that could affect your benefits? Let me break this down for you in plain English the way someone should have explained it to Dorothy. First and most important, if you're currently receiving Social Security retirement benefits and you're still working, even part-time, you need to report your estimated earnings for the upcoming year to the Social Security Administration before the end of December. Now, why does this matter so much? Because if you're under your full retirement age and you're earning income from work, there's something called the earnings test, and if you don't report your expected earnings accurately, Social Security might overpay you during the year, and then they'll come back and want that money returned. Or even worse, they might underpay you if they don't have current information, and you'll miss out on money you should be getting. Let me explain how this earnings test works because it confuses so many people. For 2025, if you're under full retirement age for the entire year, Social Security will deduct $1 from your benefits for every $2 you earn above $23,040. That's the magic number, folks, $23,040. So if you're 64 years old and you're working part-time at the hardware store or doing some consulting work and you think you're going to earn maybe $30,000 next year, you need to let Social Security know that before December 31st. If you don't report this, they'll keep paying you based on old information. And then when they figure out you earned more than the limit, they're going to come after you for an overpayment. And trust me, dealing with a Social Security overpayment is a nightmare you don't want to face. Now, here's something else that could affect your benefits, and this is especially important for those of you who are divorced. If you were married for at least 10 years and you're now divorced, you may be entitled to benefits based on your ex-spouse's work record, even if they've remarried. But here's the catch that trips people up. You have to apply for these divorced spousal benefits, and if you're already receiving your own retirement benefits, but you could get more money by switching to divorced spousal benefits, you need to file that application before the end of the year to maximize your back payments. Social Security can only pay you retroactive benefits for up to 6 months in most cases, so every month you wait as money you're leaving on the table. I spoke with a gentleman named Robert last month who had been divorced from his wife for 15 years. He was receiving his own Social Security retirement benefit of about $1,400 a month. What Robert didn't know was that his ex-wife had a much higher earning record, and he was entitled to receive up to 50% of her full retirement age benefit, which would have given him around $1,900 a month instead. That's an extra $500 every single month, folks. By the time Robert found out about this and filed his application, he had already missed out on years of higher payments. Don't let this happen to you. If you're divorced and your ex-spouse earned more than you did during your working years, call Social Security before December 31st and ask about divorced spousal benefits. Another critical issue that could cost you serious money involves Medicare premium deductions. Now, I know this sounds like it's about Medicare and not Social Security, but stick with me because they're connected. Your Medicare Part B premium is automatically deducted from your Social Security check each month. For most people in 2025, that standard premium is going to be $185 per month. But here's what you need to know. If your income is higher than a certain threshold, you'll pay what's called an income-related monthly adjustment amount, or IRMAA for short. This means you could be paying significantly more than $185 for your Medicare premium, and that extra amount comes right out of your Social Security check. The IRMA determination is based on your tax return from 2 years ago. So for 2025, they're looking at your 2023 income. Now, if something has changed in your life since 2023, like maybe you retired or you lost a spouse or you had a significant reduction in income for some other reason, you can appeal that IRMA decision by filing what's called a request for reconsideration form. But here's the deadline that matters. If you want to get that IRMAA reduction applied for the entire year of 2025, you need to file that form before the end of December. If you wait until January or February, you might get the adjustment, but you'll lose out on those earlier months of savings. And we're not talking about small amounts here, folks. Depending on your income level, IRMAA can add anywhere from $70 to $400 or more to your monthly Medicare premium. Over a full year, that's anywhere from $840 to nearly $5,000 coming out of your Social Security check. Let me tell you about Margaret, a widow who lost her husband in 2023. When he passed away, her household income dropped significantly because she was no longer receiving his pension income. But Medicare was still charging her the higher IRMAA premium based on their combined income from when her husband was alive. Margaret didn't know she could file that reconsideration form based on her life-changing event. When she finally found out and filed the form in March, she got the adjustment going forward, but she had already lost 3 months of savings, which amounted to about $700 that she could never get back. If Margaret had known to file that form in December, right after receiving her IRMAA notice, she would have had that money in her pocket. Now let's talk about something that affects our disabled friends on SSDI or SSI. If you're receiving supplemental security income, you know that SSI has very strict income and resource limits. For 2025, the resource limit for an individual is $2,000, and for a couple, it's $3,000. These are resources like money in the bank, stocks, bonds, and certain other assets. But here's what a lot of people don't realize. Social Security counts the value of your resources on the first day of each month. So if you're getting close to that $2,000 limit, maybe you've saved up some money or you received a small inheritance or a generous gift from your kids for the holidays, you need to make sure you're under that limit by January 1st, or you could lose your SSI benefits entirely. I know this sounds harsh, and frankly, I think these limits are way too low and haven't kept up with inflation, but these are the rules we have to work with. So if you're on SSI and you've accumulated some extra money in your checking or savings account, you need to think about how to handle that before December 31st. Now, I'm not telling you to do anything improper, but there are legitimate ways to spend down excess resources. You could pay ahead on your rent if your landlord allows it. You could stock up on non-perishable groceries. You could buy necessary medical equipment or supplies. You could prepay for funeral expenses through an irrevocable burial trust, which is exempt from the resource count. The key is to document everything and make sure you're spending the money on legitimate needs, not just trying to hide assets. There's also something called the administrative tolerance amount that a lot of SSI recipients don't know about. Social Security won't suspend your SSI benefits for a resource overage if you're only over the limit by up to $100 for an individual or $200 for a couple. But here's the catch. That's only if you're actively trying to get back under the limit and you succeed within 3 months. So if you find yourself just slightly over that $2,000 limit as December ends, you might have a little breathing room, but you need to act quickly in January and February to get back under the limit and avoid a benefits suspension. Another deadline that's coming up involves the Ticket to Work program. If you're on SSDI or SSI and you want to try going back to work, the Ticket to Work program can help you do that without immediately losing your benefits. But if you're currently using a ticket and working with an employment network, you need to make sure all your progress reports and documentation are up to date before the end of the year. If your employment network hasn't been submitting timely progress reports, Social Security might decide to do a medical review to see if you're still disabled. And that's a process nobody wants to go through unless absolutely necessary. Make sure you contact your employment network before December ends and confirm that everything is in order. Let me also talk about something that affects people who are receiving both Social Security and a pension from work where they didn't pay Social Security taxes. This is called the Windfall Elimination Provision, or WEP, and the Government Pension Offset, or GPO. These rules can significantly reduce your Social Security benefits if you receive a pension from federal, state, or local government employment where you didn't pay into Social Security. Now, there's been a lot of talk in Congress about repealing or reforming these provisions, and some legislation has been moving forward. But as of right now, these rules are still in effect. If you're affected by WEP or GPO, you need to make sure Social Security has accurate information about your pension amount, because if they don't, they might be reducing your benefits by the wrong amount. Before the end of December, call Social Security or check your online account to verify that they have the correct pension information on file. If they're reducing your benefits by too much, you could be losing hundreds of dollars every month that you're entitled to receive. Here's something else that's critically important if you're still working and haven't filed for Social Security yet. If you're planning to file for retirement benefits in early 2025, the month you choose to start your benefits can make a significant difference in how much you receive. Because of the way Social Security calculates your benefit amount based on your full retirement age, and when you actually claim, filing in January versus waiting until later in the year could affect your benefit calculation, especially if you're still working and earning income. Before you make that decision, you should request a consultation with Social Security or speak with a qualified benefits advisor to understand exactly how your claiming date will affect your monthly payment amount. This is a decision that will impact you for the rest of your life, so you want to get it right. Now, let me give you some practical action steps you need to take before December 31st. First, go to ssa.gov and log into your My Social Security account. If you don't have an online account yet, create one right away. Once you're logged in, review your current benefit amount and make sure all the information Social Security has on file is accurate. Check your earnings record to make sure all your working years are correctly recorded. If you see any errors or missing information, you need to contact Social Security immediately to get it corrected. Second, if you're working and receiving benefits, estimate your earnings for 2025 and report that information to Social Security. You can do this online, by phone, or in person at your local Social Security office. Third, if you received an ERMA notice and you've had a life-changing event that reduced your income, file that request for reconsideration form before the year ends. Fourth, if you're on SSI, count up your resources and make sure you're under the limit by January 1st. Fifth, if you're divorced and you think you might be eligible for benefits based on your ex-spouse's record, contact Social Security and ask about your options. I also want to talk about the importance of keeping good records. Save every letter, notice, and document you receive from Social Security. Write down the date, time, and name of every person you speak with at Social Security, along with what you discussed. If you submit any forms or documents, make copies for your files. I can't tell you how many times I've heard from people who had problems with Social Security because they couldn't prove they had reported something or submitted a form. Good record keeping can save you thousands of dollars and countless headaches down the road. My friends, I know this is a lot of information to take in, and some of it might seem overwhelming, but I want you to understand that you've earned these benefits through decades of hard work, and you deserve to get every dollar you're entitled to receive. The Social Security system is complicated, and sometimes it feels like they make it hard on purpose, but don't let that discourage you. Take action before December 31st ends and protect your benefits. If you need help understanding any of this, reach out to your local Social Security office, contact a qualified benefits counselor, or reach out to organizations like AARP or your local area agency on aging. These resources are there to help you, and you shouldn't have to navigate this alone. Remember, we're all in this together, and we need to look out for each other. Make sure your friends and family members who receive Social Security know about these deadlines, too. Share this information with them because knowledge is power, and the more we know about how the system works, the better we can protect ourselves and our benefits. Don't wait until January and wish you had taken action in December. The time to act is right now today before it's too late.